Thank you for joining us. Welcome to Business Morning on Channels Television. I am Bisi Adebayo. Oil prices jumped today, extending yesterday's gains on signs that U.S. crude glut is not growing as quickly as expected and that gasoline demand battered by COVID-19 restrictions is starting to pick up. WTI crude futures were up 9.83% at $16.52 a barrel, while international benchmark Brent crude rose 5.63% to trade at $23.81 a barrel in early trade. On Wednesday, the U.S. benchmark surged 22% and Brent crude rose 10.3% to $24.87 a barrel in light trading. Now, the federal government recently secured a $3.4 billion support facility from the International Monetary Fund to cushion the effects of COVID-19 on Africa's largest economy that has been hit by the misfortunes of crude oil price. Is this facility a loan or a grant? What are the terms and conditions of the facility? Can Nigeria pay back with ease or not? Well, these are some of the questions that a former Deputy Governor of the Central Bank of Nigeria, Dr. Tunde Lemo, who joins us live in the studio, will be answering this morning on the program. Welcome, Dr. Lemo, on the program.
Thank you for having me.
So let's begin with you telling us why it's important for Nigeria to actually request for this emergency financial assistance from the IMF.
Thank you very much. These are not ordinary times. Just as we read in the news that the Q1 result for U.S. shows that the GDP has shrunk by over 4%. That is the highest or the lowest it will go post-2008 financial crisis. We all need to understand that COVID-19 is a very, very serious global pandemic that will be a very, very serious setback for the global economy. In fact, it's been said that we may not see, the kind of recession we will see may be the worst since the depression of 1930. So these are not ordinary times, and the nation should understand the fact that we need to get very, very rapid financial accommodation to cushion the effect, particularly our balance of payment support.
But is this actually a grant or a loan?
Of course, it's a loan. I would not be surprised if it's also a non-concessional loan. But then, what's important today is not whether it's a support or a grant, but we need to support our balance of payment. And just imagine that overnight, oil price shrank by a very, very serious margin. And as if that was not enough, we also have the global pandemic. This clearly shows that there will be severe cash flow problem for government. Paradoxically, this is also the time they need to ratchet up public spending to ensure that households and businesses that are negatively impacted by COVID-19 will survive. And so we must see it as something completely extraordinary.
But compared to the soft credit lines of $3.5 billion application to the World Bank, as well as the $2.5 billion planned to be taken from the AFDB, some analysts are actually worried about the fact that this facility is non-concessional because it comes with a basic interest rate, it attracts a commitment fee, service charge, and of course a surcharge and outstanding credit. What's your view about all that?
My view is that the purpose for this is unique. It's actually to support our balance of payment. We do not want currency crisis. We do not want severe crisis that would make Nigeria, we don't want to default, and because that is much more devastating. And of course, it's important since we have that window. It's about 100% of our quota that IMF is releasing to us, and it's needed at such a time as this. And it's a balance of payment support. It's different from other project-tied facilities that you obtain from other sources.
So how is it actually different?
It's different because it goes directly to support your balance of payment. Government revenue, you know the percentage that comes from foreign exchange earnings. And today, because of the plunge in oil price, we also need to curtail output from a little over 2 million barrels per day now to 1.4, maybe later in the year, 1.5 million barrels per day. And when your price has plunged, sometimes even to below cost. So you then imagine that you suddenly just run short of foreign exchange, and yet life must continue, businesses must be revived. This is the time you need to put oxygen in businesses, and then forget a little bit about your desktop. You will come back to that in medium to long term. But on the short term, you need to ensure there is life.
But why do you think that Nigeria actually opted for the IMF rapid financing instruments as against the rapid credit facility window, just like Ghana, of course, which says $1 billion, because the RCF window, we actually understand, carries 0% interest rate, and that comes with a grace period of 5.5 years and a maturity of 10 years?
Well, you see, the devil, they say, is in the details. I'm sure policymakers understand all of this. Don't also forget that we are also members of IMF. Which is why, of course, if we have that window there, and then, of course, is our quota, and the opportunities are there, don't also forget that some of the reasons you need the support is because it also helps you to fix so many other things. I like it because Nigeria doesn't have anything to hide. One of the things that we ensure that we do, of course, is accountability, ensuring that such spend on public spending is advertised and is made known to everybody. And so if you will do that, you then must ensure that your house is clean. I will even say that whilst these other opportunities are there, which I said earlier, may be project tied, and this is to support our balance of payment. You don't want a situation whereby companies will not be able to operate because they can't access foreign exchange, and then shut down all of this. Well, 200 million people must be catered for, particularly at such a time as this.
Well, there's also a short-term facility due for repayment from 2023, of course, with oil prices that have crashed now. How well positioned is Nigeria to actually repay this loan?
I don't envisage that oil price will be this low till 2023. This is 2020. It is expected that post-COVID, from the second quarter of next year, we will turn the corner. Yes, we may enter recession from second or third quarter, but by second, third quarter of next year, when we turn the corner and oil price recovers, and then, of course, all of the other initiatives and then the diversification effort of government will start yielding fruit, and then we should be able to have sufficient muscle. All we need to do is just to ensure that we do not grind the wheel of economic progress, because doing that, of course, will complicate things in the future. I believe we still have sufficient time. Within the next 9 to 12 months, we should turn the corner, and then we should get back to the growth phase when we then have sufficient financial muscle to be able to take care of this.
Well, it's good to stay positive. Well, there's also this concern that the loan contravenes Section 41 of the 2007 Fiscal Responsibility Act. Of course, that requires that the government can only go for long-term concessional loans for capital expenditure. But such a relevant section of the law has not been amended by the National Assembly.
You see, we're talking about a pandemic the size of which we saw last over 100 years ago. And 2, 3 years ago, 5 years ago, 20 years ago, when these laws were crafted, nobody envisaged an emergency of this nature. It took U.S. Congress just days to pass the bill that released over $2 trillion palliatives to their citizens. And this is a country that has the highest indebtedness globally. And so laws are made for men and not meant for laws. And that is why National Assembly should rise to the occasion, get back together, and then, of course, make whatever amendment there is so that we can have life. We're talking about life support now.
Well, the rapid financing instrument now, which we have taken, is not designed to finance capital projects, of course, but only to address the balance of payment challenges, just as you've mentioned. But the question is, will Nigeria be able to keep to these terms and conditions for the loans?
Of course, you know that this loan was approved by the board of the IMF. And these are eminent and experienced people who understand the size of the Nigerian economy. They also understand how resilient the Nigerian economy can be. And all of what they said was that, look, you guys, you can very, very quickly fix public expenditure to ensure that life is back. But medium to long term, don't keep your eye off the ball to ensure that you have a fiscal restraint that is necessary to power the growth you envisage. And then medium to long term, you can then ratchet up spending for power and other structural issues that will ensure that the economy is freed up for productivity. All of that must have been considered in the analysis before the loan was approved.
Well, the IMF sees the facility limiting the decline in Nigeria's FX reserves, which have been depleting lately, of course, financing the budget and other temporary spendings. Could that be the basis on which the CBN is actually resuming the sales of dollars?
Well, I no longer work in central bank. I don't think so. I think central bank had enough watchers for this. Recall that the nation was grounded before, or well, I would say the major cities of Abuja and Lagos, and then now that Mr. President has allowed some activities to resume, including banking, then behoves central bank to resume what they're doing. It wasn't that it was so bad that they didn't have foreign exchange. After all, we still have over $30 billion in the foreign reserve. But of course, you see, also the good thing about this IMF loan is that it's also going to ensure that central bank puts its eyes on ensuring that we have a foreign exchange rate that is determined, that is more flexible. And then, of course, you're going to see a convergence of rates. Of course, they have done a bit of that. But I think medium to long term, it is also expected that there will be moved towards reunification of rates, so you don't have these multiple rates that you have in the market. This program will also ensure that that central bank does that.
So you think that this would actually have a positive impact on Nigeria's FX markets, which has been under pressure?
Absolutely.
All right. So the fund is also asking Nigeria, of course, to expedite actions on the unification of its exchange rates, just as you talked about now. But isn't that likely to compound the situation that the country has found itself lately, especially with this pandemic?
It's not going to compound it. Recall that we didn't have inflow that we expected in the last few years because of multiple rates that were in the market. International investors would rather prefer a rate that is unified. And this is how you can free up your economy to attract FDI. You will see that once we put a handle on that, there will be better flow. It's going to provide additional liquidity, forex liquidity for Nigeria.
But how can Nigeria avoid a tedious economic recovery post-COVID-19 with all of these debts?
Nigeria certainly needs to sit back and look at the debt stock post-COVID. But like I said, this is a period of crisis. You are a family. You need to ensure that you look at your spending. But suddenly, there is an emergency. You have to deal with the emergency first. But when all of this dust settles, of course, we need to sit down and look at the debt stock. We need to sit down and ensure that we have loan stock that is sustainable. I agree with you, but that is when we have life. Today, what we're looking at is the life support. When that happens, and it is COVID-19 is over, we have an economy that is very strong and resilient. We are the biggest market in Africa. We have resources. All we need to do is to remove those structural impediments and free up our economy to ensure we attract necessary investment, and then you see this economy.
But what are some of these structural impediments that you're talking about?
Well, structural impediments in the sense that you find out, for instance, that you have natural resources in Nigeria that should attract investment. But investment is not coming because, of course, we've talked about the issues around foreign exchange rate determination. You also look at productivity. Today, one of the benefits of COVID-19 is that all over the globe, people are going to be looking at their supply chain. Should I depend 100% on Asia to supply raw materials? A lot more will be looking in the direction of Africa. Why not let us diversify and source some of our raw materials from Africa? Nigeria readily comes to mind to do that. But if we do not have power and we do not ensure that cost of doing business is low, then we may lose out from that opportunity. Remember, Egypt is there, and other emerging economies are there. But Nigeria stands a very good chance because of our population and because of the resources that we have. So if we can look at power and other structural impediments and then get Nigeria to be more productive and the business can roll, then you find out that most of these multinationals globally will then invest in Nigeria so they can source raw materials from Nigeria. This is one of the benefits that I believe post-COVID Nigeria will have.
And talking about post-COVID now, what else would you advise Nigeria to do differently to attract more investments into the country post-COVID, just like you mentioned?
Post-COVID, what we need to do is ensure that Nigeria becomes an investment destination of choice. Let's deal with security of lives and property. Let's deal with cost of doing business. The Vice President's team has done a good job in ensuring that those things that are like roadblocks are removed. But we need to also move up the ladder so that cost of doing business and then ease of doing business is improved upon. Once we can do this, and then we can have power, we look at infrastructure, railway, and all of these things happen so that it costs much less to set up businesses in Nigeria. Then we see most of this. You see, the global investors are rational economic agents. Once these things kick in, then, of course, Nigeria will automatically benefit.
Now, should Nigeria actually pursue a debt forgiveness process for some of its outstanding loans in view of the impacts of COVID-19 and, of course, the crash in oil prices?
It's very necessary we do that. Our peers are doing that. I also recall that very recently, Nigeria and some IDA countries also benefited from that, some concession from China and others. Why not? Because of what happened. Like I said, 3-4 years ago, nobody envisaged this level of distraction that we'll have in the economy. And if our comparators are asking for it, we also should ask for it.
But how is it possible, for us to actually get this debt forgiveness from these countries?
Well, it all depends. It depends on how these contracts were concluded in the first instance. And then, of course, it also depends on other factors that we will also place with our creditors. So the conditions under which these loans were contracted will determine the level. It is also important for us to also look at the socio-economic factors, the fact that, of course, we've been distracted by the Northeast militancy, the fact that, of course, we have a large number of people who are operating below poverty line. And then, of course, the problem is now exacerbated by COVID-19. So all of these social factors, once they are put on the table, I believe quite rightly we will be able to get some concession. Now,
back to capital projects funding with the facility now. Should Nigeria actually develop a framework to track the use of this fund?
Definitely. You're talking about the 3.4 billion.
Yeah,
definitely, it's one of the conditions I believe IMF will even put, that we must track the fund, we must report, we must publish how those things are utilized. It must be in the public domain for accountability. The governance around it is very, very important.
The former Deputy Governor of the Central Bank of Nigeria, Dr. Tunde Lemo, thanks for coming on Business Morning.
Thank you very much for having me.